Warren Buffett is 94 years old, one of the greatest investors of all time. But today, every quarter could be the last. And the day the news breaks, everyone will be looking at the same screen, the one showing Berkshire Hathaway. Will we witness a 10% flash crash in just a few minutes? To anticipate such a brutal reaction, it's crucial to understand the current state of Berkshire, how the group is structured, what recent portfolio moves reveal, and who's truly in charge. Because the day everything shifts, it's this foundation that will be put to the test. Today, Berkshire Hathaway holds $347 billion in cash. It's massive, enough to hand out $43 to every human on Earth or $1,300 to every American. But the raw number isn't enough. What matters is the proportion. Cash now makes up 30% of Berkshire's total assets, the highest level ever recorded in the company's history. The last time we saw this takes us back to 2006, right before the global financial crisis. And it's no coincidence. At every major period of stress, whether in 2000 or again in 2008, Buffett was able to strike big deals. Even in 2020, in a different way, Buffett had already rebuilt massive cash reserves. As he's always said, cash is a strategic weapon. Except this time, he's not using it. Not yet. In 2025, Buffett officially stepped down as CEO after more than 60 years at the helm of Berkshire Hathaway, a long-anticipated handover, but a symbolically powerful one. He no longer makes the decisions. He still consults and remains present. But the capital allocation is now fully in the hands of his team, with Greg Abel leading the charge. So what would happen if the news broke tomorrow morning? Buffett is still alive, but if tomorrow he passed away, the market would be torn between two opposite emotions. On one side, Berkshire is a cash machine, one of the most solid businesses on Earth with real assets and a valuation that's more than reasonable. Berkshire is currently trading at 12.6 times earnings, a nearly 25% discount to its own 15-year historical average of 17. The S&P 500 trades above 28, more than twice as high, so mathematically imagining a 20% drop like some fear makes no sense. Berkshire Hathaway is not a startup priced on promises. It's a massive conglomerate made of real, profitable, and stable assets with consistent cash flows year after year. Berkshire fully owns ultra-high cash flow businesses like BNSF Railway, one of the largest railroad networks in America, Geico, a giant in auto insurance, Berkshire Hathaway Energy, powering millions of households, and cult brands like See's Candies, Dairy Queen, or industrials like Precision Castparts and Lubrizol. These companies generate solid profits year after year and are 100% owned by Berkshire. They inject fresh cash into the group every single day like a continuous stream of income, and more importantly, they allow Berkshire to run in a closed loop. No need for markets, no need for debt, just pure cash flows fueling more assets. Berkshire also holds giant positions in Apple, Coca-Cola, Bank of America. So no, a major crash is impossible. This is not an opinion. It's a structural reality. If we did see a flash crash, if markets dared to drop that low, there would be a massive buyback. And quite simply, everyone would jump in to buy this cash machine and premium asset basket at a discount. The stock would rebound instantly. Berkshire can't collapse overnight. It's not possible, but on the other hand, there will inevitably be emotional reactions and short-term speculation. His death will mean he's no longer here to consult, and that Berkshire, the incredible machine he built, will be entirely in the hands of his successors. And trust isn't something we can transfer overnight. So, no crash, but likely a marginal dip of 1%, maybe 3 or 4% in a moment of emotion, but not more. Because the truth is that the market has been pricing this transition for years. Buffett is 94. It's not breaking news, but when the headline finally hits, the screens will still flash, because it won't just be the end of a life, it'll be the end of an era. What many people don't realize is that Warren Buffett is no longer CEO of Berkshire Hathaway. He officially stepped down in 2025 after more than 6 decades at the helm. Today, Greg Abel is in charge. He's been Buffett's designated successor for years and has already been running operations for quite some time. At his side, Ajit Jain, overseeing the insurance arm, which is a cornerstone of the Berkshire machine. Few understand this, but Berkshire is not just an investment fund, it's a cash flow engine. At the heart of it all is insurance. These businesses generate what's called float, money collected today but not needed for payouts until years later. And Buffett used that float for decades to buy companies, stocks, and real assets without ever relying on debt or outside funding. Both Abel and Jane report to the board, and the governance structure has long been built to operate without Buffett. So no, Berkshire won't be leaderless, and from a purely operational perspective, Buffett's death wouldn't change the day-to-day. But what could disappear is boldness. The boldness to place huge bets when everyone else is afraid. The boldness to strike in the middle of chaos. In his prime, Buffett had that gift. In 2008, for example, he injected $5 billion into Goldman Sachs during the heart of the financial crisis, then poured billions more into Bank of America, on terms only he could demand. Risky bets, but insanely profitable. But in recent years, that Buffett has been quieter. In March 2020, as markets collapsed, everyone was waiting for him to strike, like in 2008. But nothing came. Instead, he shocked investors by selling all airline stocks near the bottom, locking in more than $4 billion in losses, just weeks before they soared back. It was a rare miss and a sign that the Buffett of bold crisis bets was already fading. No major buybacks, no legendary acquisition. And now, with more than $300 billion in cash, one question remains. Who will pull the trigger? And will they have the same boldness when the next panic hits? We've seen it. Strong balance sheet, reasonable valuation, real assets. But one question remains, and maybe the most important one. What will they do with all this cash? Today, Berkshire is sitting on over $300 billion. And for months, even years, not much has happened. No major buyback, no bold acquisition, no contrarian move. Just cash, building up and quietly sitting in 5% T-bills. With Buffett in charge, that silence made sense. He was capable of waiting years. And then striking fast, like in 2008 with Goldman Sachs or Bank of America, right in the middle of the storm. But now? Buffett no longer makes that call alone. It's up to Greg Abel and his team to hit that button. And that's the real test. Will they have the same patience, the same boldness, the same ability to deploy billions when no one else dares? Nobody knows, not even the market. And that, right there, is where doubt could creep in. Not about Berkshire's strength, but about the future effectiveness of all that capital. As long as that question remains unanswered, cash becomes both a strength and a question mark. And in case of a sudden shock, even short-lived, it's that uncertainty markets may punish. So, what will happen the day the news breaks? Buffett passes, the media explodes, tributes flood in, markets open, and everyone's eyes turn to the same screen, Berkshire Hathaway. There won't be a crash, because the fundamentals are solid, because the valuation is reasonable, because the assets are real, and the succession plan is already in place, likely one of the most closely prepared transitions in corporate history. But in the hours that follow, amid the emotion and the doubt, we might see a brief, marginal reaction, triggered by one thing: confidence. Buffett won't be there to reassure from atop his track record. He won't be there to explain or to buy when panic strikes. And even if Greg Abel is competent, it'll take time for him to embody that role. In truth, the only real test will be future capital allocation, what they do or don't do with that mountain of cash. But if when the time comes, Berkshire acts as it did in 2008, seizing an opportunity no one else dares touch, then the message will be clear. Even without Buffett, the philosophy lives on. And in that case, it won't be an end, but the beginning of a new cycle with the same principles, the same discipline, and the same quiet strength.